I'm Victor Cantore. I'm the president and CEO of AMEX Exploration. Our project is in the province of Quebec. We have a high-grade project. We just recently released an MRE, a resource calculation. It was an updated one. So I'm really happy to talk about it more.
Well, Victor, good to see you again. Look, I think there's, I guess, some mixed views as to how you're coming after this project, what you're planning to do. So maybe can we just sort of spell out the plan, the business plan today? What does that look like?
Yeah, so the business plan, look, I'm of the belief that you're an exploration company. The minute you think you can put this into production, I think you should. By no means are we going to be stopping exploration. Exploration is still going on. We do have 197 square kilometers of prospective land on a greenstone belt right in the middle of the Abitibi Greenstone Belt. So basically, it will be bulk sample. You want to do things properly and intelligently. Bulk sample to do all the scientific testing, and then start with some toll milling and a full on mine. We're going to spell all that out in an upcoming PEA, which should be out hopefully in the next 60 days or so.
Okay, so let's be clear. Just because you want to move into production doesn't mean that you're done on exploration. There's more where this lot came from.
Absolutely. All our current deposits are open in all directions. What I want to try to do is look, I'm a shareholder myself. And I definitely want to grow this company in the least dilutional way possible. And I think you do that with free cash flow down the road. Like I always say, this deposit, the age of the rocks here are approximately 3 billion years old. I think waiting a couple of more years, I think the gold is still going to be there in a couple of years, and then we could. Here, I'll use the term. We can turn it into Swiss cheese and go find all the ounces that we need to find.
Right. Okay. I get the rocks don't change there, but it's what happens to the company in the intervening period. Most exploration companies raise money to drill. They hopefully find some stuff, and they raise more money, and they keep drilling. Your model, I guess, it may be well understood in Australia, even South America, but the Canadian market is used to sort of, let's see how big this thing is before we actually start mining. So can you just kind of get into the weeds a little bit about this kind of anti-dilutary model of yours? What could it be in terms of cash flow? Can it cover all of your costs? Are you hoping never to have to go to market again? Is that what's the picture you're painting here for people?
It's getting the initial capital to actually start your bulk sample and put this into production. All I'm trying to do is put this into production, and the exploration, which is not revenue producing, you just push that out a little bit longer. I mean, when you have we've been very fortunate with what we found. I mean, we have 830,000 ounces in measured and indicated, 16.2 grams per ton. Right beside, you're in the town of Normetal. That's where our central operations are. That town was created from mining. There was the Normetal mine just 4 kilometers from there. You have a town, and we put it all in our last. In the PEA, again, you can't rely on that because now we have a new MRE. So I just want to give all the disclosures and the waivers. So when you look at the numbers of the PEA that we had issued back in November, it shows you're right beside the city. You don't need to put in a mining camp, so there's no fly in, fly out. You'll have plenty of workers from the area. Now, if the deposit was in a different area, where your capital expenditures will be extremely expensive, then I get it. But here Mother Nature gave you this beautiful high-grade deposit. It's up to us to how can we mine it the best way, or how can we take advantage of the deposit the best way for our shareholders, and that's what we're trying to do.
Okay, so in terms of like the path forward and the time frame going forward, it'd be great to understand that. But before we do you think the market is rewarding companies like yours changing a business model? Because I've said to you for past few years, oh my goodness, it's these high grade results that you're getting. It's almost a bit boring, jokingly. but maybe the market, maybe it also got a little bit tired of the high grade results. So it felt like maybe this might be a smart move, but it doesn't seem to have rewarded you in the way that perhaps you were expecting, or the way that I was expecting. Why do you think that is?
So when it comes to business model, we're actually not changing the business model. We're enhancing the business model. We're actually adding. So we're still going to continue exploration in a limited way, but we're still continuing exploration. We do have a drill on site, continuing to drill, regional exploration program. So that continues on. But in the meantime, is that how can you really turn this into real cash flow, real free cash flow, and then go to the to a real exploration program where you could get back again, having 10 drills in a non-dilutive, in the least dilutive way. Look, we're a non-revenue producing company. Obviously, there's always going to be dilution, but how to do it in the least dilutionary way possible.
Right. Okay. So let's look at how this thing moves through the phases, right? So I guess it's the usual. You're going to have to go through the economic study phases. Do you need to add many more ounces to the kind of next set of economic studies, or have you done enough and therefore you can just focus on the economic studies rather than exploration or meaningful exploration over the next couple of years? How do you play it? How do you spend your money?
Because of the location of the deposit, because of the grade of the deposit, it actually you can convert this into a mine, and we know we've proved that with the PEA. So we're going to have to move forward. Now we're going to do another PEA. Do we need more ounces to be a mine? I don't believe so at all. I mean, we do have enough numbers on there, and the numbers are even higher. The numbers are even higher today than what they were on the last MRE. So I'm expecting again, this is forward looking, but I'm expecting a better PEA than the last one. The numbers will tell the tale. So we're going to know that. We'll know that very shortly. So to answer your question, do you need more ounces to turn this into a cash producing mine? Absolutely not. I have all the ounces I need. Do I want to grow it? Absolutely. Do I believe I can grow it? Absolutely. And you look at our landmass. I mean, you look at the Perron property itself. Not talking about Perron West. We're going to continue doing work on the Perron West, the new acquisition. That was about 150 square kilometers, and there's a lot to discover there. We're just going to do the work that we need to do right now in order to create drill targets, and then we'll continue on there. But there is so much to find at Perron itself that there's a lot of work to do, and it's really encouraging that when you show up to site that like we do, you're in the city. I mean, there's basically two towns that where the one is where the deposit is, and one is where our center of operations, and they're all asking you, oh, when is the mine going to go up? When are you guys going to start producing? Because they want to see the jobs. But I mean, reality, you still need to do all the studies. You still need to do, your years out on actually cash flowing.
But talk to me about how you go about this, because obviously it's a complex geological setting that you're in. We've got these super high grades. In fact, there's super high grade zone, and then there's high grade zone. So you know a lot about what you've drilled so far. How much more sort of infill drilling are you going to need to do to kind of piece this together and understand how this thing gets built out as a mine rather than just continuing to deliver kind of high grade headline numbers into the market? So can you talk about the type of drill modeling that you're going to be you envisage doing going forward?
The drilling is really regional drilling right now. We're just looking for new discoveries on the project. There might be a little bit of drilling on some of the known targets, but the high grade zone, when you look at the size of the measured and indicated that we have on the property, you don't need any more infill drilling, at least from my view. Again, like, this is a forward looking statement, but you have 1.6 million ounces in measured and indicated. If you add the 2 million ounces in inferred and you didn't have much indicated, yes, in order to do a pre-feasibility or a feasibility study, you need to have inferred. So I'm not envisioning much infill drilling. There will be some drilling needed for the feasibility study, but not for it. It's for rock mechanics and hydrological drilling, for those kind of things. But not for not for infill drilling.
Right, and so I always worry when sort of companies want to try and kind of rush these things forward. So let me try and understand the timeline better. Okay, November you kind of put out the PEA, right? It was like $950 million with about a 60% pre-tax IRR using $2,000 gold. Obviously, we're a little ways past that at the moment. So one would suspect that even with a kind of plus or minus 30% on that PEA, this thing's making a ton of money. How do you ensure, or what do you focus on, I should say, to ensure the continued, like, the commercial optimization of what you're doing and what you're building, knowing what you know now?
Yeah, absolutely. So you do it in steps. A bulk sample is very important because you get all the scientific information. You're able to reconciliate all your grades, that all those super high grade intersections that we had. Now you're able to reconciliate it with a bulk sample. So we'd be going underground. The minute you have your there's a couple of things going on at the same time. One, you're gonna have a PEA that comes out that will show all the scenarios, meaning first 4 more or less a 4 year, like a certain amount of years of toll milling, and then with your full on mine. Immediately after that, you launch a feasibility study only on the toll milling. The reason being is that you can get a feasibility study, you can get it done a lot faster when you're talking about just toll milling for the first couple of years. And that means the minute you have your positive feasibility study, you can actually launch all your environmental work, and here in Quebec, we call that the BAPE. You can launch all that. That's usually like a 2-year process. Again, permitting is not it's not in our control. All we could do is follow all the steps. I mean, there are rules there. As long as you follow the rules, you should fall within those timelines.
Okay, and tell me a little bit about what's in the district, what's nearby. Are you envisioning building your own plant, or are you going to work with others?
Absolutely, we will build our own plant, and the next PEA will also show that. In our previous PEA, that's what it showed. It showed building our own plant. We're just contemplating, in order to de-risk the project, both from a technical and a financial point of view, is to toll mill the first few years. And reason being is that you'll be able to, so with the cash flows that you'll be getting, again, I can't, since we have a new MRE, unfortunately our PA, I can't really talk much about those numbers because that's become historical. So I have to give all the waivers. But if you look at those numbers, and I'm expecting the new numbers to be a lot better, that's some serious cash flow that you'd be getting. Obviously the costs will be higher because you're going to have to put in toll milling charges, and you're going to have to put in transport charges in there. So you with their free cash flow, you'll be able to put the money away. And when you got to build your whole plant, you've already got a substantial amount of money that your own rocks have given you to build that plant, which is quite unique in this situation. The other part on the technical side, the rocks don't always behave the way you expected them to behave in theory. And you'll have years of looking at how the rocks actually behave, so you'll be able to size your plant properly. There's been issues when companies size their plant and all of a sudden the rocks are not behaving. So I think it's a very not only just responsible, I think it's one of the best ways to go ahead if you can cash flow, especially with these kind of numbers. It's not a mine that's just barely breaking even or whatever. It's contemplated to make some serious amount of free cash flow.
Right, and with tolling in the region, like obviously you want a bit of competitive tension, or else the person who owns the plant maybe sets the price. So are there choices out there for you in terms of people who can manage this kind of high grade ore feed?
Absolutely. If it's in our presentation. When you look at, it's in the first few pages. I don't know exactly which page on our presentation where we show all the mills in the area. I don't want to give names out because it's gonna show that either I don't want people thinking that we are negotiating or not negotiating. I'll just leave it at there's a lot of mills. There's a lot of mills in the area with excess capacity. Not only on the Quebec side, there's also on the Ontario side, and when you're moving high grade like this, like transport charges doesn't really matter. Like whether you're moving it 60 kilometers north of us or you're moving it 150 kilometers to the east of us or south of us, it doesn't really matter. It doesn't affect it much.
Right. Okay. And it's someone talks to me about the team, because obviously there's a point at which where you're going to have to start not just with the economic or as part of the economic studies. It stops becoming about an exploration story. It's a development story. So the metallurgy, or even just trying to understand the type of drilling that you're going to need to do to kind of support any data required for the mine planning, for instance. So how's the team going to evolve?
Yeah, absolutely. We did bring on the team a mining engineer. We're going to be bringing on. I believe our circular is already out, so his name should already be in the circular. We're going to be bringing somebody with 40 years of experience of mine building. So we're going to have a dual team. Like again, we're on a dual path of exploration and mine building. So we will have also a dual team of mine builders and also exploration people. Absolutely, you need to bring in the mine builders here, and bring in the mine builders, mining contractors. Absolutely.
Okay, fine. So just come back to the timing of this. I think everyone understands the sequencing and phasing of this, but the time frame that you ideally will be aiming for, because you've obviously got permitting as well in there, environmental in there, the toll, all the various agreements that you're going to need to have in place to put this thing together. Can you give us a sense of what maybe the next couple of years looks like?
Sure. And again, I gotta give all the cautionary. This is really forward looking. I am the CEO of the company. I do make forward looking statements. And again, when it comes to permitting, it's not in our control. We can only do whatever is there. So I'll give you timelines. We're expected to put out a PEA in short order, whether it be 2 months, 3 months. The minute we've got that, I would do a feasibility study just on the toll milling. We've been told that we could expect it a lot quicker than doing we can expect it a lot quicker than doing a feasibility study where there's tailings management facility, a mill, opening up opening up also your open pits, and that the minute you have a positive feasibility study, hopefully we could get it within 6 months or so. That's when you can launch. Once you have a positive feasibility study, that's when you can launch your environmental, like all the permitting that you need. And again, it'll only be on the. We're trying to fast track it to revenues, so it'll only be on the toll milling, but we will also start preparing a feasibility study on the entire mine. But that's going to take a year and a half. But the feasibility study just for the toll milling, so that can get us our environmental and the BAP process going. So within 2 years after that date, if everything goes well and everything's in line, you should actually be in toll milling. You should be a toll miner, but you're still gonna go ahead and build your entire mine. Why we can do that? Because we're very fortunate that we have 830,000 ounces at 16 grams per ton. That's really that's really where you want to take advantage of that. Mother Nature gave it to you. How do you mine this thing responsibly and to benefit the shareholders?
Right, and again, it's just coming back to the people thing. Obviously, the permitting process is long and arduous, as is the need for people who know what they're doing when it comes to kind of local communities and First Nations engagement agreement. Have you got those people on board?
Yeah, you'll be seeing press releases. We're working on that. That's something that we need to put together. Is bring in increase our staff to take care of that on the social acceptability part, First Nations that negotiations. And the reason why we're going to toll milling first, it's a lot easier because you're not disrupting. It's not the same thing as an open pit and a tailings management facility. You're sending that already to existing infrastructure somewhere else. And again, I say it's because the high grade nature of our deposit that we're able to transport it anywhere inside the Abitibi Greenstone Belt. And that means from Val-d'Or to Rouen to Timmins, it doesn't change much for us.
Right. So I think you sort of touched on this earlier in terms of proximity to town, but there's no sort of large infrastructure items which need to be on your balance sheet anywhere here. You're using existing regional infrastructure. Is that right?
That's correct. So you've got so think of this as a triangle. So you've got an electric transformer station that supplies electricity to Casa Berardi, and it supplies electricity to the town. So that transformer station is 5 kilometers from the town, and it's also about 5 kilometers from where we want to put down our laydown development. So basically, it's the entry to a portal, which you're looking at maybe it'll be 5 meters by 5 meters. Again, the last PEA was they were contemplating 4.5 meters by 4.5 meters. So it's going to be either that or 5 meters by 5 meters, opening. You're gonna have a garage. You're gonna have what you normally need around the mine, but we're not talking about large open pits and a tailings management facility. Those are the things that take long, because you really have to do things responsibly from an environmental point of view, and that's why we would be able. You still have to go through the whole process, but it's a lot faster when you're toll milling, because the rejects are going to it's wherever they're gonna toll mill this to. That's where the rejects are going to.
Okay. Now, see, El Dorado is still, 9.9%?
9.9%, that's correct.
9.9, yeah, okay. So, I mean, are they comfortable with this plan? Are they involved in these discussions and in this thought process? Do they need to vote on it, approve it, or are they on board?
Well, look, it's 9.9% they own. I mean, management will make the final decisions for sure. Who wouldn't like a company that they own 9.9% that's going to cash flow, and we're going to go find a lot more gold after in a non-dilutional way. Like, I'd like to know which shareholder would be against a plan like that. I don't see how they would be opposing this, or any shareholder, as a matter of fact. And they're great. I'll call them partners. They're great partners. They're great 9.9% partners. Like, we do have our quarterly meetings with them, but it's a technical committee meetings, and we do it's great work. They really provide a lot of insight. You look at their Lamaque project, right? High grade mine, very similar. If you looked at PEA of the Lamaque project back in 2017 to our last PEA, they look like they look pretty similar. So I think that's why I think they jumped in ahead of the pack. They see Lamaque there. Now that's all those forward-looking statements, and that's what I see when I look at those two PAs side by side. That's what I see.
Right. And I know you're sort of conscious of coming out with a sort of anti-dilatory process. Get to revenue quicker. I like it. When you look at the market at the moment, do you think you're clearly going to need to raise some money at some point during this process, and I don't imagine you're going to find it too hard, because say the economic study the new PEA will probably point out a few obvious things to people. Do you think there's different types of monies that you'll be looking at, or will you be conventional and look to raise equity on this?
Yeah, I'll leave that one at the TBD, to be determined. But yes, okay. we will need to raise money at some point. We don't need to tomorrow morning, that's for sure. We've always done it in a very responsible manner. And just because we will be raising money, it doesn't mean it would be I don't know how it's going to be. For example, it could just be 2 or 3 major shareholders and that want to support the project, and it doesn't open up to many people. So we'll see as it evolves. I've been seeing some companies being very successful in raising money lately.
Yeah, no, there's some alternative financing, I think it's been called, and as you say, if the narrative suits some mid caps, obviously you've got one on board. They may become interested as well. Who knows? Look, I think we could go on and on about the district scale upside, etc. But I think at the moment, people want to sort of see you hang some economics on this thing and maybe kind of reset the clock, as it were, on that. So thank you very much. Good to see you. We will eagerly look forward to the next 60 days and what that brings you, and we'll speak soon.
Yeah, we'll speak soon. I just wanted to add that's where I'm trying to position the company is that we're still an exploration company, and I'm also trying to position the company as a near-term producer. That's really what we're trying to accomplish.